Hello, everyone. Hello, this is Charlie Tian. I'm the founder and the CEO of GuruFocus. And this is the first session for the new year. And I wish everyone a great new year and happy new year. And I'm actually sitting in Plano, Texas, my office. And let me know where you are. And happy new year again. And I wish everyone will have a great new year and good luck in investing this year. And yeah, if you're not aware, we are running a New Year membership promotion right now. And if you're a free member, you're signing up for the first time, you will be getting up to 30% for your membership. And if you are a premium member, and this time if you upgrade to Premium Plus, you will get up to 30% also, up to 30% off. And if you add more regions, you will also get a big discount. And yeah, thank you, Preven, Pedro, and Eric, Bill. And I'd like to hear more from you. Let me know where you are. And again, Happy New Year. By the way, if you want to reach us, we want to provide the best service to our users. Whenever you want to reach us, you can always contact us in different ways. Let me share my screen with you, and I will share with you how to contact us if you need to contact us. Okay, let me share. This is my screen, and you can see that if you click on the button here, you will get up to 30% off, or save up to 30% if you sign up for your membership now. And if you want to reach us anytime, you can always reach us through the chat support during business hours here. And you can also create a support ticket. And then you can also schedule one-on-one meeting with us. And during the meeting, it will be only you and one of our associates. And you can ask any questions you have about the website. And of course, you can also call us. We will be very happy to talk to you also. And yes, thank you all. And again, Happy New Year. If you want to know what we have been working on, and you can always look at the tutorials. Under the tutorials, there's a change log. The change log will list all the changes we have made. Of course, the tutorials has a lot of tutorials in it too, a lot of video tutorials. And here you can, if you want to know how to use different sections of the website, you can search it. We provide lots of videos and articles explaining how to use the website. And also, if you any financial terms we have been using and you don't understand how it's calculated, can always come to the financial glossary here. And you can search a term and it will explain to you. For instance, here we just explain net current asset value. If you click on that, we'll show you exactly how we calculate this value, and so that you can have a better understanding of the numbers. Okay, these are some introduction at the beginning, and now let's look at the changelog again. And the changelog lists what we have been doing, and sometimes we add one more filter to the all-in-one screener. For instance, sometimes we make some clarification adjustment to different functions. And the latest change we have made, actually the biggest change we made is on the stock page. If you let's come to any stock page. If you want to see any stock page, And now let's come to Apple, for instance, and come to any stocks. And the big change we add this month, actually the previous month, December, was the income statement breakdowns. How Apple makes money, for instance, in this case, can see that for Apple, the revenue source, the iPhone, iPad, Mac, and services, and others, wearables, and these make up Apple's 394 billion of revenue. You can see the percentage of each segment, and how much is the gross profit? The gross profit is 43.3%. These are the cost of goods sold. Then Apple overall has a net income of 99.8 billion, which has a net margin of 25.3%. So this is a revenue breakdowns, and this new feature we have added. And if you look at here, you can look at the historical numbers. If you just select the drop-down from the drop-down and look at earlier years, for instance, in the case of Apple, okay, in earlier years, some are geographic. Okay, I think maybe from starting 2017, and we have the business segment. iPhone was 61% in 2017. Service was only 13% in 2017. But today, if you look at today, iPhone is a smaller percentage and service is a bigger percentage. And you can see the difference, how Apple makes money. And we draw this chart ourselves, actually. We have the numbers. If you want to look at the details of the numbers are in the 30-year financial page. It's called segment data. Here it's called segment data. If you come to segment data, it shows you the different segments by business segments and also by geographic areas. Segments, that's the segment data. Okay, let me look at the questions. Okay, Happy New Year. Okay, tell me how our product compare with market access LF. Actually, I think our product is really the best. And for investing, the most important thing, investing research, most important thing is the value a product provides, and we provide everything for the investors who love to do fundamental research. We don't do much technical, and we're mostly fundamental oriented and value quality oriented. Okay, Happy New Year, Sophia. Yanli, okay, nice to meet you again. Nice to see you again. Happy New Year. And Bill, yes, we have added the shareholder yield. Yes. And okay, thank you, Previn, for the comment. Again, Tommy, this is from we designed the chart ourselves, and we are still working on it to make it better, actually. And if you have any questions, suggestions, and let me know. Also, if you have questions, ask in the conversation area, and I will address the questions as possible and as much as I can. Okay, let me see. There's some questions. Can we print our note section? Can we make our own note section in my phone for earnings? I think you can. I'm not sure about printing. I think we had some problem with printing, and we are working on it. We have a job queue for that, but I will follow up on that. Don, thank you. And is it possible to add further breakdowns and non-operating expenses? And it's a little hard. We actually thought about that. The financial statement needs to be standardized first. Otherwise, we cannot break down more. Okay. Yeah, this is a breakdown. Any other questions you want to take a look? Let's take another look, for instance, in the case of Microsoft. Or if you have any questions you want me to look, and I will go to that company. If you have any stocks or companies you want to look, and I will go there. And in the case of Microsoft, look at here, the cloud, the intelligent cloud, which is 38% now. Personal computing, 30%. And productivity in business process, 32%. So Microsoft has a very almost equally diversified revenue source. And of course, it has a very high profit margin as well. And let's look at another company. Any company you have in mind? And Tesla. Okay, let's look at Tesla. Tesla, of course, most of the revenue is from the car and it has some solar service. And Tesla is making money, at least it's making about 10% profit revenue. Net margin now, if you look at several years ago, 2017, it was losing money. And 2019, it was losing money. It had some operating income, but still losing money. And then become profitable in 2020. And now 2021 it's even more profitable. Okay, Google. And you can always search here. If you are not familiar with it, you can always search it here. Yeah, and the case of Google, of course, the search service, Google services, and Google Cloud, and hedging gains. Okay, there's some, I think the Google services, these are including search and YouTube and others. We don't have a further breakdown on this one, but it also has a very high profit margin of 29%. And if we look at several years ago, the margin was actually smaller at that time, it seems like. Okay, it's kind of 21% in 2009, and okay, 2018 was, 2017 was only 11%. Okay, but overall, Google has a quite consistent profit margin, quite consistent high profit margin. These are one of the most important widgets we have added, and we actually have others. This is a stock summary page, and it can be fully customized. And if you look at here, historical operating revenue by geographic region and by business segment, you may not see this when you come to your stock page. The reason is because you are probably in the default layout. So if I click here, this is the default layout. That's what most people are saying if you come to here. And you need to customize a page so that you can basically create your own view here, and you can add those widgets to your view. And once you add it, for instance, I add this one, I add the geographical segment chart and down. So you can see that it has already added to the geographic breakdowns and the business segment breakdowns. And you can move this around to anywhere you want them. And if you don't want them, of course, you can also remove it, just remove it here. You can remove it here. And if you move it lower, you can move it lower. If you think this one is not that important for you, you can move it lower and move it this different positions. And you can also create a shortcut to this just by clicking on here, setting, and it said you can add to dashboard. So it's already added. Let me see. Okay, this one. Pin to quick access. I think this one may still have some. Let me remove it for now. And if I added back geographic segment charts and geographic segment, income statement breakdown. If I add it now down here, and if I pin to a quick access, now it's pinned to income statement breakdown. And if I move it to different places, lower, and move it to lower. And the next time if you want to go here, just click on that. You can jump to that position quickly. And yeah, that's the chart, and I think it gives you a much better understanding of the business of the business that the company is in, and give you a very visualized view of how the business has been doing. And if you look at thicker bars here, and the business is very profitable. Let's look at another company like McKesson, for instance. It's a drug distribution company. And okay, now if I look at the income statement breakdown, you can see that the profit margin is so small. The operating margin is just 1%, and the pre-tax margin is 0.7%. Net income is only 0.4% of the business. So that's very low profit margin. But it's a drug distribution company, and the stock has been doing pretty well last year. It went up 50%, but yeah, I just don't like companies that has very thin profit margin. Okay, let me look at the questions. Can we do income statement of the latest quarter? For some companies we can, but we cannot do it for most companies, is because lots of times the quarterly data does not have the details of the business segment. Yeah, we actually plan to do a cash flow statement chart also, and we're still working on it. Okay, next question. If I want to compare multiple companies, how do I do it? And I will get back to that. Oh, okay, that's the business segment chart, and I encourage you to add it to your stock page. Add to your stock page, and I'm sure that it gives you a much better understanding of the business. Again, in the case of McKesson here, the profit margin is just very thin. And of course, there is a, okay, Brooks is talking about Amazon. Yeah, let's look at Amazon. Amazon income statement breakdown here. Yeah, Amazon has different services, different segments, and you can see that it's quite diversified now. But if you look at 5 years ago, and it wasn't as diversified. Now it's more diversified. It has online stores, advertising, which is getting big also. It's 31 billion in revenue last year. And AWS, which is 13% of revenue, but a big portion of the profit. Physical store, 3.6%. Subscription services, and third-party sellers. And Amazon has a profit margin of 7.1%. And if you look at several years ago, let's look at 2017. Okay, somehow it's not loading. 2017. Okay, 2017. And online store was a bigger portion, and AWS was a smaller percentage. If you look at that time, the net income was only 1.7% of the revenue. So the margin was extremely small. And now the margin is much higher for Amazon. And yeah, that's the goal, is to help you to understand the company better, and to avoid some companies that's not doing well at all. And we're still working on this, actually. This now, for instance, another company called Guardian Health. which is a micro testing company, and has been losing money. And with the chart, you can clearly see that it's losing money. But we're still working on how to make this portion of display better. And yeah, that's of course, with all this, you should not forget that what we have originally, the financial strength of the company, the growth rank and the momentum rank, the valuation rank, the growth, the growth and the financial strength. I think those are the most important aspects of the company. And the profitability, actually, the profitability and the growth and the financial strength. Those are the most important aspects of the company. I put them together in this view. And because it's losing money, this company, so you can see the profitability rank is low, financial strength is poor. And if you look at Amazon, yeah, Amazon now has a much better profitability and financial strength. Of course, the valuation is not that favorite still. Yeah, that's the new feature, one of the new features we developed. Any questions on this? If you have questions, feel free to ask in the YouTube chat box, and I will certainly address them. Okay, now let me look at the questions. MBM 446 has question of drawing historical prices. And of course, with prices, you can always come to our interactive chart, and you want to compare different compare the prices for different stocks. Okay, then you just add them here, and it will all be displayed. And AZO, for instance, yeah, if you come to here, they'll all be displayed. If you want to look at the 10-year performance, okay, 10-year performance, 10-year compare their 10-year performance, and there's an option set percentage change, and this will give you the 10-year percentage change. Or okay, you want to compare with SP 500, and I think we should add SP 500 here. But as for now, you can always compare with the ETF SPY here, and can also compare with the Nasdaq corresponding ETF here. You can see the 10-year performance and the 5-year relative performance here. If you come to the options and look at the percentage change, we have noted here, we have notes here and numbers here, which company returned how much during the 5-year period, during the period you select. And can see that the best performing, this one here is a green one. Green color is AutoZone. AutoZone actually, yeah, it's even went up even in last year, although the market went down actually. And most of them went up before 2022, but then came down during the 2022 market downturn. If we look at the last year, just 1 year, you can see that only Amazon AutoZone went up. Of course, you can change the date here if you just want to look at the last year, and you can see that the date when the percentage here also. That's that's how you draw the charts. I'm not sure that answers your question, MBM 446. But that's for prices, that's what you can get. But you can always add, of course, other factors to it, other series to it. And if I change it to just price, and you can add revenue. If you just click on revenue, it will add all the data. Then revenue, of course, is quarterly data. Can look at actually You can select. Here we display annual data. You can select quarterly data. You can also have the TTM data. TTM data here. If you if what you prefer. And okay, something look at this one. Something it's more seasonal. If you look at some peaks, periodical peaks here, it means the business is seasonal. And this purple color one, it's actually Apple revenue. Yeah, Apple is seasonal business, and people tend to buy more close to year end. So the last quarter usually has the highest revenue. Yeah, in this case, another one here, Amazon, of course, it's also seasonal. We buy more during the holiday seasons. Yeah, that's what you can remove this, and so you can only display the revenues. You can also look at the most important valuation ratio, PE ratio here for all the companies. If I remove that one, if I remove the revenue, okay, okay, now it's a PE ratio. And if you have revenue here, you can see that the revenues are drawn on this chart, and the P ratio is on this chart. You can modify them. You can change the color. And change the color things. I want to change this one to red. Yeah, it'll be red. You can change the color. Can change the line styles to bar. Yeah, to area. Yeah. And you can also select which axis you want to draw it on. That's a feature for the interactive chart. It can be a very powerful chart. After you do all of this, you can download it. You can download it to an image, or you can download the data as well. You can download data directly for the series you have selected. You download an image, and you can share it. You can embed it into other places. If I click on that, it will generate a chart. That's a chart it generates, and you can embed it to other places. Okay, and not sure I answered your question. And now, if I look at Eric, are geographic data also included in all-in-one screener? Not yet. The geographic data are not included in the all-in-one screener yet. But if you can send in a request by creating a support ticket here, we will consider it. We'll think more about it, and we'll consider it. I think it's a meaningful suggestion, meaningful request. Yeah, that's the interactive chart. Any other questions, please feel free to ask me. The only thing I will not do is to give you advice on stock picks, but I will answer all the technical questions and to show you how to use our website, to show you how it can help you with your stock research. Okay. Now let me talk about another improved feature, which is a DCF calculator. Actually, we have this DCF calculator for a long time. We have had it for a long time, and we recently made changes to it. We made change to it. We add a visual chart here to help you understand it better. And can see in the case of Amazon, the DCF free cash flow model give you a negative fair value. But we also provide an earnings model, earning per share model. And inside of free cash flow, it uses earnings. And Amazon has a small fair value as well. And if I look at Apple, DCF, yeah, it tells us that Apple is more undervalued at this point, either earnings per share model or free cash flow model. It's more more undervalued. And if you're not familiar, the discount rate here it's a 10% discount rate, and we always use 6% over the fund 10-year Treasury constant maturity rate. So 10-year Treasury constant maturity is about 4% now. So the discount rate here is 10%. If 10-year Treasury rates change, so this rate will also, this default discount rate will change. But you can always adjust it yourself. Can adjust it, and once you adjust all this, you can save it. You can save it as your default parameters. The growth rate here, the default is a 10-year growth rate, 10-year revenue growth rate. 10-year earning per share growth rate. So as we explained here. And if you think that Apple has wide moat, and you can always increase it. You can. Okay, about DCF. So Brooks is asking, can you give me some basic info for discount cash flow? Actually, if you scroll down here, we have detailed explanation how DCF is done. And it's a discount cash flow model. And basically, as Warren Buffett said, that the company's intrinsic value is what the future cash flow is. What a future cash flow is. But the future cash flow needs to be discounted to today's value. That's why you have the discounted cash flow model. And please read this, and I think it's a very good explanation. And you can, please always pay attention that discount cash flow model is actually quite limited. It's not as can be applied universally anywhere. It's actually limited only to the companies that's more predictable, that has more consistent performances, business performances. And so that's why we added a business predictability here. And only for the more predictable companies, you can, the DCF model makes more sense. Otherwise, it may be misleading. So you need to be careful when you use discount cash flow model. Don't forget, we also have a reverse DCF model here. A reverse DCF model it's saying that the current stock price, is it justified by the growth of the company? And so that's why I generate an expected growth rate. For in the case of Apple, if the business can grow 7.66% per year in the next 10 years, the current stock price is justified. We think it's more justified because in the past 10 years, Apple could grow the cash flow, free cash flow at 14.2%. So it seems to be more justified in the case of Apple. But if we look at another company, McKesson, for instance, it requires maybe the stock price seems to be also fair value. The expected cash flow is 6.81. It may not be reached. And it's comparing with the earnings in this case. And there's some, I will look into more of this. Yeah. That's a discount cash flow. The reason also we have this red is because the business is not very predictable in this case, in the McKesson's case, and which is something you should always pay attention to. Let's look at Microsoft. Microsoft free cash flow 16.644%, and free cash flow rate is 11%. So yeah, the discount cash flow is too high for Microsoft. And so that's why I'm seeing that currently Microsoft is more overvalued. The stock price is more overvalued in this case. And we know that Microsoft is not doing very well today. It's down 5%. But again, you shouldn't be paying attention to short-term stock price moves. Okay, let me look at the question. Bill, oh yeah, thank you, Bill and Previn, for the comment. And Previn asking EPV, earning power value. I think that's, you're talking about the Bruce Greenwald's EPV calculator. And we have a EPV value, actually. We have a EPV value. It's in the summary page. It's actually here. Earnings power value here. And we use Professor Bruce Greenwald's model. If you want to know how it's calculated, you can click on that. And here it shows you how it's calculated directly. The formula is here. That's how you calculate the EPV model. Yeah, it's not a customized model, but it's what we follow Professor Bruce Greenwald's model to calculate the EPV valuation. Yeah, we have different ways, many different ways of calculation. And personally, actually, I like the GF value now these days much better. And I think it's more objective and removing the lots of cyclical effect. Okay, let me look at. Okay, Yanish is asking, can I add removed stocks into the model portfolio? Yeah, we will add it back actually. Yandish is asking about the model portfolio. The model portfolio is under tools. It's under tools. We create this model portfolio in different times. You can look at the overview of the performance here. The SP 500 is the first column here. Then we have different model portfolios here, model portfolios, and their performances. The one that has been doing more consistently is the most broadly held portfolio. I can see that during the last 10 years, I averaged 12.75% versus SP 500 10.1%. I underperformed last year. But over the last 17 years, it outperformed 13 times, underperformed 4 times, but it did underperform last year by 7% here. And yeah, we have other model portfolios based on the Buffett Munger screener, based on 52-week low predictable companies. And this one also outperformed over the 10-year period, but not everyone outperforms. Actually, the historical low PB ratio one, which is a definition for value investing, low PB ratio. We know that value strategy didn't really do very well last 10 years, so this model portfolio underperformed. And we also started some new ones. Actually, okay, they're not in the summary page here, but we use a GF score as a GF score model portfolio, top 25, and when this 90 for GF score less than 90, top 25, less than 80, top 25, less than 70, top 25, and less than 60, top 25. At least we haven't seen the highest GF score outperforming yet, but at least the ones with low GF scores has been doing poorly. The one below 60 and 70s have been doing poorly. The one below 80 actually did better than the market. The one below 90 did much better than the market. below the one below 100, similar to the market, outperform market sometimes, underperform sometimes, similar to the market. And the one I said, the most broadly held one, which has the longest history, and the performance numbers are here. Okay, Yandish or Yan, I'm sorry how to pronounce the name. Yandish, yeah, we will add the positions that has been removed back here. We will do that. These model portfolios are rebalanced once a year, and you can see that if you click on here, some more were added in 2006. So it's from the very first year when we create this model portfolio. Microsoft has been added since 2006. Has been here it's all the 17 years, and gained 748%. And Berkshire Hathaway added in 2008, gained about 300%. Apple added in 2012 at $14 per share. Now it gained 700%. So these are once we add them in, and as long as they are in our most broadest held positions, we don't remove them, we don't change them, we don't reduce them. So they are now the largest positions in the model portfolio. And the one we just added, actually, this year, as Bank of New York Mellon and Salesforce, Johnson Johnson, Taiwan Semiconductor, USB Corp here. They were just added on the first day of this year, first trading day of this year. So yeah, that's a model portfolio. That's actually, you probably know that I started the ETF. The ETF is basically following very close to this strategy, and that's yeah, you can always find more information of the ETF. Any other questions? Any other questions? If no more questions, let me continue. Again, we're doing the New Year promotion right now, and as a free member, you can get up to 30% off. And the offer will end. This promotion will end next Monday. And if you're a premium member already, you can add regions. You can upgrade to Premium Plus. Also get up to 30% off. And at this point, and the offer will end next Monday. And we will not do this promotion. We will not do any sales. We'll never do it during the middle of the year. Okay, now let's continue. We know that the stock market was down about 20% last year. And so how's the market valuation? And we provide this Buffett indicator. If you're not familiar, if you're not familiar here, Buffett indicator telling us that the market is still quite overvalued and not that much undervalued, although it's down 20%. And another indicator is the Shiller PE. Shiller PE, which is telling us that current Shiller PE is still 7.9% than the 20-year average. The Shiller PE ratio did go down quite a bit, but it's still kind of above the 20-year average. That's where the valuation is. The future expected return is not that high. At this point, I think that it's good. It's better to invest in high quality companies at reasonable prices. Okay, let me look at the questions. Okay, Yanish asking, in this model, do we purchase existing one? Do you purchase existing position when you sell? Yes. And we always rank for instance, for the broadest held company as model portfolio. We also rank all the stocks, and the top 25 always stays in the model portfolio, always is always a new model portfolio. But in most cases, just like I show you, only a small number of the companies will change, and we'll sell the ones that get out to the top 25 and buy the ones that comes in as top 25 and equal weight. The new positions are equal weighted. We don't touch the old positions. Can we create a section for mode? And we thought about that, but I think it's I don't feel that we have the capability of doing that at this point. What I do to look at mode is usually look at the company's margins, the gross margins, the operating margin. Look at the long-term margins. Can give you a very good idea about mode. For instance, let's look at Microsoft. We all know that Microsoft has a very strong mode, and so how about the margin? Can see that Microsoft. Let's look at the margin. Okay, gross margin seems to be declining, probably because of the product mix. But if you look at the last 7 years, the gross margin actually increasing. Gross margin is increasing. I think that's when Microsoft changed their CEO. The gross margin increasing actually, and margin increasing, margin expansion is a very powerful sign of the business that has strong moat. I can see that the operating margin also increasing, and the net margin is always also increasing, and it can give you a very good sign of the business moat. Look at the long-term margin. That's a very good sign. And I'm trying to think of companies that has poor margin, has margin shrinkage. And if you want to know that, actually you can screen it. You can screen those margin decliners. I think I have a screen here. It's called margin decliners. Yes, margin decliners. A company that has declining margin. Declining operating margin or declining margin is always a bad sign. And when a company margin is declining, it usually means trouble. We have observed this many times. Let me see if there's among S&P 500 companies, if there's any company that has declining margin. By the way, this filter is called index membership. If you want to look at the companies in the indexes, just click on this and select the index you want to look. Yeah, and in S&P 500 companies, there are some declining margins. Okay, look at this General Dynamics. Let me look. I don't know. Let's see if the margin is really declining. Okay, the margin is here. Operating margin. Yeah, it has a slightly declining operating margin. Look at here, the annual data. Yeah, the margin has been declining for General Dynamics. And when the margin is declining, it's usually a bad sign, because even if you grow revenue, the profit may not grow as the margin has been declining. And let's look at the stock performance. General Dynamics, the stock performance. Let's take a look. 5 year. See, the 5 year, for the last 5 years, General Dynamics actually didn't get much. Didn't do much. It may be related to the margin declines. The margin has been declining for General Dynamics. Usually, that's not a very good sign. Let me look at another company here. We know Ford. I don't want to look at Ford. Well, Tower. I'm not sure what company. What does this company does? But let's take a look. Okay, let's look at 5 year. 5 year, actually, the stock didn't do much. It went up, then went down, then during the pandemic, then recovered some, but The 5-year return is almost zero. And let's look at the margin. The operating margin. Yeah, the operating margin has been consistently declined. And yeah, consistent declining. That's not a good sign at all. I'm not sure what this company does, but it doesn't matter. I'm not interested. I'm just showing that when a company margin is declining, it's not a good sign. You want to avoid those. Yeah, previous commenting that high GF score is a good mood. Yeah, I will agree. If you look at the GF score, and look at the GF score, when it's above 80, 85, it's relatively safe. And you can look at the historical GF score also. When the GF score is also declining, which is not a good sign. When GF score is low, which is not a good sign. Yeah, I thank you for the comment, Preven. Always look at our financial strengths and the profitability ranking. Those are actually based on long-term numbers and can give you a very good idea about the company's mood and the company's quality actually also. And the profitability rank, you want it usually above 8. The financial strength, you want it above 6. Okay, let me look at the questions again. Previous asking, do you think growth stock will come back in 2023? That's a tricky question. I don't want to predict the market. I think the overall valuations is not cheap. Now, for some smaller growth companies, the valuation went down a lot. But overall, it's not that cheap still. I will stay with undervalued, reasonable valued, high quality companies. Okay, Previous asking, what's my view on Chinese stock market? I think Chinese stock market over for long term, like 10 year, 20 year, I'm not optimistic. Just I don't like the government. I don't like the way they're governing. But in short term, they may do well. The reason is because China is now finally reopening from the COVID. They changed their policies suddenly, completely, but I know lots of old people died. My college professors, when I was in college in Peking University, I had lots of professors, and they are now in their 80s. Just in December, 3 of them died. They all taught me during my college years. It was very sad. And lots of old people died. But overall, the economy may be recovering in short term. Okay, MBM 46 about the long-term debt. Currently, we don't have the data for the long-term debt. We used to have a tool to do that, but it's not very. It has some problems, so we discontinued it. And currently, we don't have the data, but I think it's important data. Our data source, the raw data source is Morningstar, but all what you see here, financial strengths and growth rank, all these are from ourselves. We develop all these ourselves. The GF value, the value chart, valuation calculation, all these are from ourselves. We calculate based on raw data, and Morningstar only provide us a raw data. All these bars, we create this ourselves. And okay, Pedro is asking, how do we do the selection for SP500? Yeah, that's a all-in-one screener question. If you come to all-in-one screener, and if you want for any filter you think of, you can always search in the search for filter box. So because you're talking about index, you just search index here. So you can see the index membership here. And then, yeah, it select that, it brings you to here, and you can select the SP 500. If you click on that, it display you the SP 500 companies. That's how you select for the index. Yeah, Rafael, yeah, thank you. Yeah, it was really sad. Yeah, they died in December, 3 of them. Sorry. Yeah. Any other questions? Any other questions? Yeah, look at the onion screener again. If for any filters you think of, always look at this search. Use this search for filter box. For instance, here P ratio. You just click on that. It brings you to there. The P ratio here. It brings you to the P ratio, and the PEG ratio. PEG ratio. I don't know where it is. Yeah, it brings you to the PEG ratio. It brings you to it. And for the display area, always click on that box. Okay, I remember there's some question about forward P ratio of SP 100. I think it's under economic indicator S&P 5. SP 500, SP P ratio. SP ratio, okay. It's SPP, Shiller P ratio for SP 500, it's this one. But you are talking about forward P ratio. Let's search forward P ratio. Not sure we have it. Okay, seems like we don't have the SP 500 forward P ratio. We only have the SP4 P ratio, SP 500 here. And it's under the economic data, under the economic indicator page. Okay. And any other questions? We have only 2 minutes left. If you don't have questions, that's all. Okay, Previan asking, is there possible to find most improved or not improved stock by GF score from last year? That's a good question. Let's look at actually from all-in-one screener. In principle, you can do it with all-in-one screener GF score. Yeah, GF score. You can do that with the historical filter. For instance, 2021, the GF score grew by at least 5%. Okay, assuming that's what we are looking for. Now it's trying to look for the companies. I'm not sure what it will find, but it's trying to look for the companies. Yeah, WK, can we add the forward P ratio of SP 500? If we can find the data, we'll certainly do that. We'll look at, let me write it down, forward P ratio for SP 500, and also the, yeah, seems like we should be able to do it. Let me modify it a little bit. Maybe I'm asking too much, just 1%. Yeah, there are several companies here. You can see the GF score. First one, Disney, 2021, the GF score is 76. Now it's 70, and now it's 80. And you can see the changes. Yeah. Forward earning. Okay, you're talking about forward earning. So earning, we basically talk about earnings. Let's search SP 500 earning per share. Yeah, it's here. SP 500 earning per share. that's past earning, not for earning. Maybe we don't have it, but we'll look for the data. Okay, and if no more questions, thank you all, and I hope to see you again next month. I will always be here on the first Wednesday of each month. And again, if you want to reach us, you can always do under the support here. You can chat with us. You can create a support ticket. You can schedule a one-on-one meeting with us, a 30-minute meeting. You can ask any question you may have, and you can also call us. Thank you all very much. And again, Happy New Year, and I wish you all good luck in investing. See you next month.